bear trend bar or bear reversal bar, the moving average. You know you have trapped bulls, so it's probably an okay short, but I think this is a lower trading range after an upper range, and I think the market should trade up, so I'm looking to buy. Okay, this is a tough long setup. I don't want that for my signal bar. I'm not going to buy that. 2-bar reversal, but it's already gone 4 ticks above the first bar, so I'm not going to do anything. 2 up bars, up, down, up, so it's a low 2 short, but very strong up. I'm not going to short. It was good for a scalp. Now the market is giving a second entry long up here at the top of this new trading range. I'm not going to buy it. Good looking bull bar. Low 2 short. It's a bear bar. Low 2 at the moving average. I said at the time it looks too perfect, and just like this looked too perfect. I think the market is going to come up here and probably above here. So I'm not going to buy. Excuse me, I'm not going to sell this. I'm looking to buy. I'd like to buy. If this becomes a final flag, I'll buy a lower low. Maybe it'll be a wedge. I'll buy a higher low. I'll buy a double bottom bull flag. I'll buy a failed low 2. I'm just looking to buy. Okay, here's the failed low 2. Good looking entry bar. Bad looking follow through. Okay, wedge, almost a double top. First gap bar in the sell up. It could trade down. Decent entry bar, 5-tick failure possibly. Okay, the scalps got out. I think this is tricky. The market's trying to go sideways more and more here. I don't want to buy this. A wedge often has 2 legs sideways to down. I want to see what the second leg looks like if there is one. Bull trend bar, pull back to the moving average, but this is a trading range, and I don't want to buy at the top of a trading range. Whenever I see any kind of a trading range, I only want to buy low, sell high. I never want to buy high, and I never want to sell low. Okay, possible lower high. I still think the market is going to continue to work up, so I'm looking to buy, not sell. Okay, a lower high, second leg. If it goes down here, fine, I'll look to buy down here. If it turns up here, I'll buy here, or I'll think about buying here. Okay, 2 pushes down, 1, 2, bear, reversal bar. I'm not going to buy outside up. I think it's an okay high 2, but your stop is down here. The stop has to probably be lower, maybe down here, because it could have a third push. Okay, if you were long there, I personally would get out here because you never want 2 bars against you. This is down, that's down. Okay, what about buying above this? I think it's an okay buy. It's a breakout pullback. You got a high 2 and it pulled back. I think it's okay to buy up there, especially since I think the odds are high the market's going to trade higher. Okay, now you got a better looking wedge. You got 1 push, 2 push, 3 pushes, or 1, 2, 3. I think that's a decent long. I know it's buying a little high in the trading range, but it's a wedge bull flag, especially here at 1, 2, 3, and the odds are high that the market is going to get up to this point at a minimum. Okay, entry, not great follow through. You got a bull body, but you got tails, and a really good looking bar here. Small tail, no tail. I'm not going to short this. You can argue it's a failed breakout above this swing high and that swing high, and it hit the minimum objective of getting back into the upper trading range. I think it makes more sense to look to buy a high 1 or a breakout pullback. Same thing. Here's the breakout pullback. A little bit parabolic here. It's okay not to buy it. Not a good looking entry bar. But the market's having decent follow-through. Another inside bar, possible wedge bear flag here. I don't like the signal bar, but like I said, Sometimes on thin days into the close, the institutions, the funds are, not the fund, the program traders are able to design programs that can really make big moves, and they can make a lot of money. And they did here, another low, another high one long. Possible buy climax, huge bar after a big run up. Tested the low of the open. Bear bar. I wouldn't short below here. This might be one last high one, so it might be a final flag. And that's what it was. There's enough room to the moving average so that there's probably enough room for a scalp. Possible the market will trade down to the start of the wedge, 1, 2, 3. Doesn't seem likely. Here's a spike, here's a channel. But it did, and it just kept selling off. With a steep moving average like this, normally there would be a move back to the moving average. If this was an hour or two earlier in the day, I wouldn't have taken the first. The market's down too hard, so I wouldn't have taken the first entry. Wouldn't have taken the second. Probably not the third, but I probably would have taken the fourth or fifth entry, thinking the odds were high for a pullback to the moving average. But like I said, there wasn't enough time left in the day for me to feel confident that the pullback would occur. So I didn't think these were good longs. Okay, a lot of two-sided trading going into Tuesday. Monday's a holiday. You got a low 2 at the moving average on the 60-minute chart with a bear signal bar. So the market looks like it should break out to the downside on the 60-minute. Daily chart, you got a bear inside bar. Could break out to the downside. Weekly chart, a pretty bearish looking week. So the market could trade below this week's low. Ultimately, I think we come down to this area, but it might take several months to get there, and it may trade up to here, may trade all the way up to here again before it gets there. But I just think the odds are that the bear has further to go. It's so overdone on the daily chart that the odds are pretty good that it's going to bounce. Maybe it'll bounce up here and then form an island bottom with a gap on this side and a gap on this side, and then trade up. I don't know. I'm going to trade whatever I see. S&P 1000, it looks like the market doesn't want to go up until it's gone below below 1,000. So, maybe early next week, maybe Tuesday or Wednesday, it'll go below there. Sometimes when it runs a key number, it doesn't run it by just a tick or two. It runs it by, 10 or 20 points. So it's possible that it comes down to this measured move target from this gap. I don't have this exactly drawn between the breakout and the pullback, but it's approximate. So, okay.